Join us for the Criterion Institute podcast as Joy Anderson, a global thought leader in business and social change, leads us through a series of discussions, interviews, frameworks, rants, and reframes that will help you better understand how to use finance as a tool for transformative systems change.
I am Joy Anderson, and this is the Criterion Institute podcast. This episode begins 2025, a year that many of us are facing with some level of trepidation. And so I love including this conversation with Lilian Mramba because it is a pragmatic look at both the accomplishments and the guts and the focus and the resilience that 2025 will require. But it puts that in the context of just being human beings trying to move some stuff forward. So in this episode, I have a conversation with Lilian, who is the Chief Investment Officer of Grassroots Business Fund. She's really led so much of the work there, a remarkable organization that I've been circling around, but was able to reconnect with and really be able to spend some quality time with Lilian in a Gender Lens Investing retreat that we hosted with the MasterCard Foundation African Growth Fund in September of this year in Kenya. And so this is Lilian and my reflection on some of those conversations, where she's moving them forward. And it's a delightful combination of both the realistic look at what kind of financing vehicles are needed to meet the needs of our economy, but also what is required of the leaders who are building those vehicles. Enjoy.
Join us next February for Criterion Convergence 21, Reimagining the Future of Gender Lens Investing. Convergence is Criterion's signature conference and a unique, deeply transformational experience that leads participants from framing to implementation over 4 weeks of structured conversation. Attended by global leaders from investing, government, and civil society, Convergence 21 will provide critical framing for anyone building more gender equitable futures. Let's reimagine those futures together. Find out more and get your ticket today at criterioninstitute.org.
Lilian, it was so cool to meet you in September. I was frankly blown away in our conversations in that retreat about what you're building, the sort of breadth of vehicles that you've built to be able to respond to the needs of businesses in Africa. So it's just so cool to see all the things that you've built.
Well, thanks. Thank you so much, Joy. That's really kind of you to say. As you were speaking, it kind of struck me. It's interesting to hear it from your perspective. From where I sit, and I've been in the impact investment space for almost 14 years now, I've been in the weeds of just trying to find different ways to support businesses that, I think are highly deserving of support because they're highly impactful, but for a variety of reasons, including some very valid ones, just aren't able to do that. And I think this all stems from the belief that if we want to create economic growth and economic development, we can't leave the vast majority of people behind. And so we need to work really hard to make sure that we have inclusive growth.
So what businesses' needs are met, right? So you're in the weeds of all of this. And what businesses are sort of taken care of within the ecosystem?
Yeah, I think if you're running or own a company that, it's a medium-sized enterprise, you have access to assets, either business assets or personal assets that can be collateralized. You have the knowledge, the awareness of even the existence of banks and financial products to grow your company, um, then the needs of those companies are being met. And we have provided some of those products. I mean, we do traditional working capital products for companies that are looking and have assets that they can provide to us. Though typically we don't require the same level of collateralization as banks would. So those needs, I think, are met. Traditional working capital, traditional asset financing, that's available quite widely. And I think banks are, especially here in Kenya, are becoming more and more aware of the opportunity that lies in the SME space.
And so then whose needs are not met? And I think what's interesting in this is you're naming it's not just whether or not the business needs are met, but whether or not the kinds of businesses that meet the needs of a broader economy are being met, right? It's not just does every business leader have what it needs to do their work, but you're also pushing on do the business leaders that are doing the right things, doing better things, responding to the needs of a broader to the people in the economy. Are those needs being met? Does that make sense?
Yeah, precisely. And research shown that the vast majority of employment comes from really small businesses, right? So if we want, as compared to large corporates, so if we want to have broad-based economic development, we can't leave small businesses behind. And I'm talking, 5 to 20 employees types, small businesses. So what we've seen is there is this special set of small businesses that are working in underdeveloped supply chains because they either have smallholder or supplier arrangements, smallholder farmers in the case of agribusinesses, or artisans, or they're creating products and services specifically for underserved communities. So take, for example, somebody that is building affordable health clinics in underserved communities. And or if you are a small business that's been run by a young person, so someone under the age of 35, if you're being run or owned by and run by a woman, the vast majority of the cases, those types of businesses don't have the same level of access to financial products and additional management support that is required to support their businesses and to help them grow. So, so that's what we're trying to address.
And so often that gets addressed. I mean, Criterion talks we sort of our slogan of fix the capital, not the company. So often what I hear is the solution for those business leaders who don't have access to capital is to give them training programs about how to engage with banks. But at some point, the products that are built by banks don't always meet the needs, right? Like if they don't meet the needs of those companies, training doesn't help that shift. And so the kind of fixing what I hear you always being about is fixing the capital, making sure that the financial products that we're offering to businesses actually meet their needs versus telling them to be a different business, right? Be a business in a fully developed supply chain, like be a business that has collateral, just be that other business and then we'll totally finance you, right?
Sounds simple, right? No,
Yeah.
exactly, exactly. And what these businesses need is capital that can be dynamic, flexible. They need risk sharing capital, oftentimes beyond what the founder has put in the business. There really isn't that much risk capital that even allows the owner or the founder to be able to think long term. What we also see is with small businesses, it's not really just only the capital. They need a lot of management support. Oftentimes, the management teams are quite thin. Most time, these are founder operated businesses predominantly. So it's not really just giving them even just capital, but how do you provide a value adding support around helping them understand how to manage their business, helping them understand how to mitigate against ESG risks that could have a strategic implication on the business, marketing, operations, and giving a package that takes care of all those things at the same time in a really dynamic way.
Sounds like sounds incredibly useful and incredibly difficult, because so often, and I think I believe this is where your merchant banking idea came from, is that meeting all those different needs is often knitting together a whole bunch of different capital providers, right? That you need a little of this and a little of that and a little of this and a little of that. And most businesses don't have the capacity or the time or the ability to be distracted by by knitting all those solutions together. They need the solution and the ability to actually fix how the capital is provided and tie together a whole bunch of different products to make it work for them is just a bridge too far.
Or even the awareness that is something that someone can even think about for themselves, that there is somebody out there that can provide that kind of an approach. There aren't many. So to even have the audacity to imagine that, as an owner of a business that is, an online retailer. I'm a young person running an online retail shop that's employing five people. To have the audacity to dream that you can get the kind of support, it's asking a lot. So yes, I do struggle with this notion that you kind of have to work on the demand side to sort of fix them up and get them closer to what the supply side needs. I think you need quite a bit of movement. The trick is, and why, we are working really hard to get this, what we call this little funky bank up and running, is it's also with the acknowledgement and acceptance that maybe it's not even appropriate to ask the supply side, if we're thinking about traditional banks, right, that are taking deposits from hardworking people like you and me. Is it really appropriate for us to? How much more risk is it appropriate to ask them to take? Or do you just need an institution that's actually funded in a very intentional way, that allows to move a bit more towards the demand side than a traditional bank really should, because they are taking depositors' funds.
Right. Look, at some level, I love that point, Lilian. I actually got a lot of my career started working in pension funds, and I was always amazed when people were like, you know what, pension funds should take more risks and fund more impact entrepreneurs. I'm like, but their job is to ensure the retirement of the people who contributed to their pension fund. Their job is not to fund funky entrepreneurs. And that's true of banks as well. Like, their job is to protect the savings that I have deposited in the bank. And we've seen, particularly in the US recently, about a year ago, right? All of our, Silicon Valley, the sort of crises in a whole bunch of banks here, because they got too experimental, they got too funky. And so banks should not be funky, but we might need funky banks.
I love that. Exactly. And that's what we're trying to do, is to create this institution that can provide this flexible capital, is able to provide the additional management support that these businesses need, and the additional almost like stick handling, because as an enterprise grows, it needs grows as well. And at some point they're going to graduate from Funky Bank us, and ideally perhaps at that point become closer to a traditional banking client. But what we've also seen is unless we are able to sort of stick handle that process, help shape up the enterprise a bit more, actually go speak to the next level of capital, let's say go to the banks and actually talk to them about why they need to take on some of our graduates. And that then doesn't happen. And that's really what, when you hear about this cliche term of missing middle, I think part of that is because you need an intermediary that's funded in a way that can basically work across the whole chain. You're not just lending, you're doing management consulting services, you're doing investment advisory, you're helping your businesses raise capital. You kind of need to have all these different tentacles working all at once in order to really make sure that an enterprise doesn't drop off as its funding needs changes or grows beyond that one funky institution.
Yeah. And I think so often we're stuck in the product or fund trap, which is from the needs of a asset owner putting money into a fund. I want to know that it's all going to be used for the same purpose so I can know what I'm putting my capital into, right? It is hard to raise money for multi-purpose funds because of the very nature of an asset owner saying, let me put money in and I want to know that it does the thing that aligns with the asset class that I took it from, right? Like this bridge between the people whose capital, like I put my money in a bank because I know what the bank's going to do. And they will tell me I'm getting a 2% note or a 1% note or a dynamic blah blah, and I know what it is and I'm putting my money in it. The funky, just to stick with the reality of that, is if I'm putting my money to work with something that's not traditional, it is harder, right? It's harder for me as the asset owner to figure out where this fits within my portfolio and what can I expect. And it's harder for you to sell it to them because while it meets the needs of the community, it makes it harder to name how it meets the needs of the asset owner.
Yeah, and thank you for underlining the work that we need to do next year.
Sorry. Go into yay fundraising.
2025 is going to be great. What we want to lead with is sort of impact as a convergence point for different investors or funders that may have, I guess, maybe slightly divergent expectations. Is to say, let's really focus on impact and impact returns. Let's focus on jobs. Let's focus on the fact that we're going to be supplying capital to putting it in the hands of women, and the additional benefits that come from that, just even beyond the enterprise, looking at sort of investments in communities and things like that. We're going to be creating jobs for young people. We're going to be in supporting businesses that are led by young people that really are severely underserved. So can we think about impact returns first, and then the financial returns and the financial aspects of the transaction that sort of follows as the one thing that will sort of bring all these different asset owners and their interests.
Right. And I think the number of people who, I think that's right. And it's what's needed, right? Like there are a set of investors who want to know that they're creating the kind of transformation that they believe is needed. I do think, though, there is a case to be made now that's maybe a part and parcel of the impact case that you're making, but it is also the lots of economies are just not actually that resilient right now. And I think your approach to this leads to resilience. And so at some point, if I'm putting, at some point, all of our expectations of asset owners are built by this sort of historical trajectory of put it in these different asset allocations and I'll diversify my blah blah, and as a result of diversification I will magically get the 5%, 7%, whatever growth I want to see in my assets. I actually think we're at a fundamentally different place at some level, though, right, Lilian? Like being able to say, as an asset owner, I expect this of the economy, when the reality is we're in a context where a whole bunch of economies are super fragile. They've been like whacked by COVID, they've been whacked by climate crises. And like at some point, for asset owners to get the returns that they want, they have to actually get it from an economy that's working. And I think some of the designs of the kinds of vehicles that you build and that you're talking about in this funky bank are actually the things that will build resilience in businesses, which will be therefore maybe not alpha but beta. And we're in a world where beta matters. That's my fundraising pitch for you. Beta matters, and that's what.
I was going to say, I'm going to bring you along to on the, out on this fundraising roadshow. Are you available next year, Joy?
Sure. I got nothing planned. I'm totally set just to travel with you, Lilian.
No, and I will say this. I think the supporters that we'll have in the beginning are probably understand exactly what you just said, and are looking at really long-term impact returns for themselves. But I think over time, once we have a critical mass in terms of assets under management, I do think we'll be in a position, just like a traditional bank, to start sort of issuing more traditional products to future investors. I'm thinking, issuing notes, for example, on an ongoing basis. But, really the first cohort of supporters for this bank, I think will likely have a strong resonance to what you just said.
And I think it is an education about the world. I mean, I'm thinking we're recording this on in the middle of December, and you and I are both facing sort of what was it you said before? December is not properly Decembering, right? I'm feeling a similar thing of like going into the new year once again. I think like you facing the right crap. There's a bunch of problems in the world, and we still need to do the same work to be able to figure out how to solve them. And it didn't magically get solved, and it doesn't magically get solved overnight. It takes decades and a community and resilience and moving things forward. But it is, I don't know if you're feeling it as well, but I'm having a moment now where I'm just like, great, another year. Go team. I got it. I'm going to be on it. But it's another year of working uphill. Yeah.
Absolutely. Yeah. My December is not Decembering, Joy. Usually at this point, sort of work is starting to taper off, catching up on all the things that you've been putting in the back burner, but it's been pedal to the metal. I think up through Christmas, up through the holiday period, and then of course looking forward next year, just knowing that we have this big task to accomplish. makes it even daunting to think about finishing December.
Right, because December means January is here.
December ending means January. Yeah. How do I stop the clock? Especially with sort of change in the political climate and shifts in governments across, the markets where we typically source our funds. It adds a bit of trepidation, but ultimately, why I said I've been in the space for 14 years. All of that with Grassroots Business Fund. Ultimately for me, I guess I have this really strong sense of equity and economic equity, and I just really believe that somebody has to fight for these companies. Somebody has to find a way to support these businesses and to be able to demonstrate and hopefully pull in others, because one funky bank is not enough. We need like 1,000, maybe not 1,000, but we need more. And so somebody has to take the first step and be able to demonstrate that there's something here that others perhaps also want to step into. So somebody's got to do it. And I guess I'm one of those people, self-appointed.
I think I'm always reflecting at the end of the year of like, or I get asked like, what keeps you going? And I'm with you on these. Somebody's got to do it. I don't have a deeper, more complex sort of sense of why. It's just needs to be done.
I used to say or think to myself, once I get this thing done, then I, will look into other avenues. Once I fix this problem, it's been 14 years of once I fix this problem. So there's that as well. Like the work is never finished, right? So we gotta keep going.
Well, and I think that's maybe I was thinking about this. We had a team call the other week, and we were reflecting on accomplishments in this year. And we started by sort of saying, what have we done this year? What are the things we've ticked off? And the more I thought about it, the accomplishments that we had this year, the things that really were change that came as, that showed up in this year was work that was started 13 years ago, 10 years ago, 5 years ago. Like this stuff takes time. And at some point it's the resilience, right? Of showing up for another year, of hoping for and sitting with a whole bunch of people who are reminding us on a daily basis that what we need is transformational change. But I'm lucky, or I'll take it if we get incremental change year after year, because I don't know how to suddenly create transformational change in complex systems that are so entrenched, like what banks expect and what asset owners expect from their investments doesn't get transformed overnight. It's what do they say, a overnight success, 20 years in the making, right? And so at some point, this merchant bank or this funky bank, this sort of ability to knit together the needs is what's needed. It's just another step in the evolution of trying to say, hey, here are the businesses that are going to build the economy, and here's the financing that we need to provide for them. And the link between those two needs to work for more people than it works right now. So here's our next attempt at it. Welcome,
Yeah.
January.
And another way that I think of it, just hearing you, is, and I'm not a huge sort of philosophical person, so this is probably the most you'll get out of me, is when you sort of live in your purpose, and when you find your purpose and live in your purpose, it's like pushing through open doors, and it happens so subconsciously, for you to say, the accomplishment that for this year was seeded 13 years ago. To me, what that tells me is that for the last 13 years, you've just been living in your purpose, either consciously or subconsciously, allowing yourself to go through those doors that are opening, and not banging your head against against walls or closed doors. And most of us in the impact space are here because because we're driven, by this strong sense of purpose. So that's really cool, Joy. And congratulations on your accomplishments.
Well, same back to you, Lillian. And I will say that that little philosophical riff was quite lovely. I think we can, and I'll just say I know, and I am inspired that in the weeds, in the details, on the ground, trying to figure out different ways to meet the needs of businesses that are creating the economy we want. You're going to just keep trudging through it. And maybe it's not, a funky bank is not some sexy high growth blah 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 thing, but it is what is needed, and I'm glad that it's your purpose.
Thank you so much, Joy, for your support and encouragement. You got this idea immediately, even before we fully talked about it. I think you intuitively understood why we needed to do this. And that was such a important confirmation for us, because we had been debating and talking about it internally, but to have met you and for you to have ourselves hear that echoed back to us was a massive confirmation that we are moving in the right direction. So thank you for that.
Yeah, you're most welcome.
To learn more about our work, visit us at criterioninstitute.org. And if you're enjoying this podcast, please leave us a review on Apple Podcasts or Spotify. Your reviews help our podcast reach a wider audience. Thanks for listening.